So here we are on another topic, this one being the purchasing department. And it's worth mentioning that the purchasing department works very closely with the accounts department because they normally are the department that lets the accounts department know, hey, it's okay to pay this bill because we received the goods or we received the items that have been ordered. And so we're going to talk about the role of the purchasing department, some documents that are used, and what a purchasing clerk should look like. Of course, welcome to the virtual space. Let's work together to learn, share ideas, participate, and learn something new. The wise always seek knowledge. So what are the functions of the purchasing department? Key functions of the purchasing, or sometimes called procurement department, are to process orders for departments using requisitions, prepare purchase orders, maintain records, maintain a list of suppliers, verify orders that have been received, determine and purchase items for the business, work with other departments, and manage inventory. So they have a lot to do with making sure that things are purchased for the store or purchased for the office, for the business space that are used by other departments. So they work very closely with other departments in helping them get the things that they need. The purchasing process. So in the process, what happens is you first need to identify what needs to be purchased. And so that usually happens if a department, like let's say the accounts department, knows that they're running low on paper or ink. They're going to ask the purchasing department, hey, we need some ink, we need some paper, and they're going to send in what we call a requisition to request that the purchasing department find the paper or the ink for them. What can also happen is, let's say the purchasing department responsible for inventory, they're noticing that inventory, which are the things that are sold to your customers, looking at the shelf, we see that, okay, we barely have any more of these particular items. We need to make another purchase so that our inventory is not low and our shelves are not empty. And so they first need to identify what needs to be purchased. Once that's done, the purchasing department is responsible for looking for suppliers or vendors to get quotes for those items that need to be purchased, because it's more than just purchasing items. It's also about trying to identify the best pricing, the best quality, and find out who is able to give you what you need. And so they normally have to get quotes, which are just estimates of how much something will cost if you purchase it from a particular vendor. And so they get that information in order to make the decision on who they're going to purchase from. And so once you're looking at your quotes, you decide who the supplier is, then you're going to prepare a purchase order, which is just going to be a request to the vendor to supply or provide me with the items that I need. And so the purchase order is prepared by the purchasing department, signed off and approved in the purchasing department, and then it's sent out to the vendor. The vendor receives the purchase order, pulls the items or gets them together, and sends them to the company itself. And so the purchasing department someone in there would be responsible for receiving those items and just checking to make sure that everything they ordered, they actually received and that the right items were received. So they're comparing the invoice, which comes along with the items, to the purchase order that they sent out. Once there are no problems, then everything is good to go. If they purchase it for another department, then they send those items that they received to the department, or they put the items on the shelf as inventory. Once the items have been received and the invoice is received, what happens next is they send the invoice and the purchase order, along with probably the purchase requisition as well, to the accounts department so they can make a payment. And they normally send it along with the purchase requisition saying it's okay to pay this bill now. We received the goods. And of course, at the end of this process, everything is filed away because they would keep their separate filing of their purchase orders that they prepared, their requisitions that they received, so that if anybody comes back, there's evidence of all of these things. And so factors affecting the decision of the purchase department, who they're going to buy these supplies from are going to be based on urgency, cost, incentives, and ability. If something is urgent, of course, you have less opportunity or you have less chances to ask a number of individuals to provide quotes. And so therefore you tend to go with whoever can get the item to you the quickest. If cost is a factor, of course, you're going to look for the cheapest price for whatever item it is. Of course, even though something is cheap, you have to be concerned with quality as well. Incentives may affect the decision. Maybe if you buy something in bulk or you buy 100 cases from a particular vendor, they give you a discount versus if you buy from another vendor, you could buy 100 cases and they sell you to you at a higher price. Well, then there's an incentive to buy from the other company because they're going to give you something or they're giving you a discount. You're going to select that company over another company because they give you something back in return. And then, of course, there's availability. If you want 100 cases and this particular vendor only has 2, then you're going to probably choose to buy from a vendor who has more and has the amount that you want. And so that's key when it affecting who we actually purchase from. This is just an example of a purchase requisition. And so it's a request that's going to be made from a department. Normally, just like an invoice, it has a specific number. You put the date on it. And if they have a specific vendor they want you to buy it from, maybe other vendors don't sell it or the specific item comes from this specific vendor, they would say at the top, okay, I want to buy these particular, I want you to get these items from this particular vendor. Here, they would specify the item number, the unique number given to an item, what the item is, the description, the quantity is how much is going to be bought, the price is how much it's going to cost, and then the total is the same thing as amount, quantity times price gives you the total. And so any notes or instructions are given, you total it up, and then the employee normally that prepares the requisition normally signs on it, and their manager signs to approve that it's okay, because you wouldn't want employees, okay, I think I want to order 1,000 boxes of paper, and the manager thinks we don't need 1,000 boxes of paper. And so the manager normally has to approve purchase requisitions in that department before it's carried to the procurement department. And so once the purchase requisition is prepared, received, and we find our vendor, then we put together the purchase order. And so the purchase order is going to be based on what's requested. You would have the name of the company, normally it's at the top, and their purchase order number, and purchase order date, and then the vendor is who we want to get the items from. Normally, we put things on here like we want it to be delivered by a certain date. That's not required, it's optional. But what's required is specifying exactly what is it that you want. You're going to specify, if you know that item number of the item, you put the item number, you put the description, and you put as much description as possible to make sure you get the item that you're looking for. In this instance, they're looking for t-shirts. And so they didn't just put t-shirts, they made sure you know it's women's t-shirts, the color is blue, and I want size 10. How many? I want 50 size 10s, 50 size 12s, and those are t-shirts, 50 hoodies that are size 10, women in blue. You have to be very specific on purchase orders so that you get the right item shipped to you and you charge for the right items. You find out the cost from the vendor ahead of time, and then normally you calculate what the overall cost for the shipment should be, or for the item you ordered should be. And so again, we have quantity, unit price, and total. And we just get this total by taking your quantity multiplied by the unit price, which is the price for one single item. So in this case, the price for one blue t-shirt size 10 is $5. But the price, if I'm buying 50 of them, is $250. You should know how to calculate that as well. We get a subtotal, it's $1,000. Taxes less than 1%. So you add the tax amount on there, which is $1,000. And so this is what you send to your vendor. When the vendor sends the items and the invoice should match your purchase order because if you're doing your research ahead of time as the purchasing or procurement department, you should know how much everything costs and it should match what's being requested. In some companies, you can't even go over this amount because they're not going to agree to pay it. If you said you're going to charge me $5 and $10 for these items, then the vendor should agree and charge you the same amount of the price. So this is an example of a purchase order that's sent to the vendor, and the purchasing department keeps a copy for when the invoice comes to match it against the invoice. Once that part is done, it's sent to accounts, the purchasing department is done with purchasing itself. Now, when it comes to inventory, if they have to keep track of inventory, what we're going to take note of is the fact that we have to make sure manage that inventory on behalf of the company. And so inventory is just any item that is bought or held for use by the company. So think of a shoe store. Shoes that are sold to customers are inventory. Let's think of a restaurant. Every time you buy plates and cups and oil and rice, that's inventory because you're using it in order to sell food to the customer. And so procurement or purchasing departments sometimes have tasks of making sure inventory is being managed. And so inventory management is important because it makes sure you identify when inventory was missing. It helps you to identify trends. So identify, maybe I realize I'm not selling these particular shoes, I need to stop buying them. I never know if I'm not paying attention to how quickly my inventory is moving or if nobody is purchasing my items. And so inventory management helps with all of this. It helps you to manage storage space because, of course, no matter how much inventory you have, if you have nowhere to store it, you can't buy anymore. And so if an item is not selling, it's taking up inventory space, then you won't have the space to buy the items that are actually being sold. And so management of inventory helps with that. It also helps you to monitor inventory levels, how much inventory is there, how much inventory is not there, okay? Inventory is normally reported either through two methods, the perpetual method or the periodic method. A company can decide they're keeping track of inventory periodically, which means after a certain period of time. So maybe they only track inventory at the end of the month or at the end of the year, or it's perpetual, meaning that it happens consistently. And so every time we sell inventory or every time we purchase inventory, we are keeping track of the levels of inventory that I have, how much inventory is on hand. And so these are the two methods that a company can decide to track their inventory. Every day, after every sale, or after it's moved, after every movement in inventory, or at the end of every period. Record keeping in the procurement department as it relates to inventory is very important. And so they keep things like stock cards, which helps you to be able to identify details about your inventory. Because you imagine companies with thousands of inventory items they're selling, they have to keep record of the pricing of the how much inventory is on hand and all of these other things. And so they tend to keep stock cards to keep track of things like where items are located, minimum and maximum levels, meaning what's the minimum amount of inventory I want to keep on hand at any given period of time. Is it okay for me to go below 10 of these shoes? Or when I get to 10, do I want to alert somebody, hey, we need to purchase some more? Or when I see I'm at 50 of these shoes, I want to make sure I'm not buying any more of them. Record keeping allows you to be able to see what's on hand to know whether or not you need to stop buying or buy. You keep track of purchases. You keep track of inventory transfers when inventory may be moved from one department to the next, and keep track of balances on hand of inventory. And so this is just an example of a stock card, which you would use to keep track of a particular inventory item. You would write down every time the inventory is bought, every time the inventory is sold, and keep a balance of how much is expected to be on hand. When it's time to go back and do inventory counts, then normally what happens is the company looks at the stock card and compares what it says, the balance it says is how much inventory should be on hand. So if it says the balance of those shoes, I should have 10 shoes on hand. When I go to count, if I don't have 10 shoes, that means something is wrong and I need to figure out why. And so for companies, the stock cards, for smaller companies with, I guess, no inventory system, the stock cards are used. But if you have a fancy system, the system can actually keep a record of every time you sell, every time you buy, every time you move inventory for you, which makes life so much easier. Because inventory is such an important aspect to the business, you want to make sure that you're protecting inventory and other assets like cash and things like that. And so a lot of these different documents and different departments and all these other things are ways of protecting inventory and assets. So it's important to protect your inventory because that's the only way you can make money. When you sell inventory, you're making money. When it's stolen or when it's damaged, you're not. And so companies have things like internal controls to assist with making sure inventory and assets are being protected. And so ways to protect them are going to be things like having video cameras in the area where inventory and cash are, making sure that doors are locked for storage rooms so that nobody that shouldn't have access to certain areas have access. There's a reason why caches are normally behind certain doors, or not everybody can come into the cache's cage, because you want to minimize the likelihood of theft or robbery and things like that. You have custodians, people in charge of inventory, in charge of monitoring inventory, persons in charge of counting floats that are different from persons that are dealing with floats. Somebody reviewing petty cash and reviewing inventory records after, they've given reports on it. Then you have inventory counts, which also help to prevent inventory thefts, because of course, if you know that somebody is checking inventory, you're less likely to steal it. And so these are inventory controls, just different things that companies do to help to protect their assets. And inventory and cash are two major assets that need to be protected in business. That's it for the purchasing department. We understood that they work along with the accounts department and other departments by helping to purchase goods that are needed. It starts off with the company, with the department, or requesting items or inventory being low, purchasing order looking for suitable vendors, selecting one, preparing a purchase order, and receiving and checking the goods received against that purchase order, and then distributing it where it needs to go. They also have some tasks involved with inventory, which can result in them being the custodians or monitoring and making sure inventory is being kept properly, that we have sufficient inventory on hand, that there's not too much inventory, and that inventory is being counted and protected on behalf of the company's best interests. And so these are things that are done regularly by your purchasing department. Feel free to play this video over and over, get more information about purchasing so that you can understand. Be prepared to understand how to prepare a purchase order, how to prepare a requisition, because there are a lot of times they have questions about preparing forms in this area. Stock cards, requisitions, purchase orders, invoices, things like that are key and have come up oftentimes in the BGCSE. Thanks for listening. If you have any questions, contact me. And of course, happy studying. Hi, Brenda here. I just want to take the time to say thank you for choosing this course. Thank you for choosing yourself and for preparing as you should for Office Procedures BGCSE. Look forward to more from me and Business Teacher Powell, and I look forward to seeing you in other classes. Bye.